My next guest says Powell is on a mission to get back to a terminal rate of 4% sooner than later, and will ease by a quarter point every meeting until we get there, which could be about 3, depending on how you count it. Paul McCulley is the former chief economist at PIMCO and currently an adjunct professor at Georgetown's McDonough School of Business. CNBC senior economics reporter Steve Liesman is with us as well. Paul, first to you, how does the overlay of these markets, the reaction to Trump and the election outcome, you think affect their decision making?
I think it makes it more uncertain when we're getting out into 25, because the whole game out in 25 is figuring out what the terminal rate should be, which is another way of saying what is our star, where will they finish the easing process. But I look at that as a 25 exercise. For the rest of this year, I think they're very much still in the recalibration mode, which is to get the Fed funds rate, the policy rate, from the wrong place to a more sensible place. And I'm of the viewpoint that to go twice more, that's cumulative 100 basis points this year, get down to 4 3/8. That does not reslope the yield curve, but takes a big chunk of the recalibration process to the finish line, and then out next year they would go down further. But I think right now, between now and 4%, effectively the Fed will never say this, but will be closing its eyes and cutting 25 each meeting.
You don't think that Trump's election, the market reaction equates itself to a loosening of financial conditions, much like they were trying to? In other words, does the election equal a Fed rate cut?
I don't think so. It depends on how you measure financial conditions, because normally you look at it as risk appetite from the standpoint of credit spreads and PE multiples and all of that on risk assets. And yes, it would be an easing from that perspective, but you also have to put in the level of long-term interest rates, which is obviously the other direction.
True.
So I don't think it obviates the need whatsoever for the Fed to normalize the yield curve. We can't talk about the Fed stopping an easing process from a starting point of an inverted yield curve. That simply doesn't make any sense. The issue is at what level are they going to reslope the curve, bringing short rates down relative to long rates. And I think 4 is sort of the axe number that we should be working with now.
And Steve, we're around 4.8% right now. I do wish they'd go back to a single rate and not this range.
Yeah, well, it makes the math just a little bit harder, Kelly, but that's why I'm around, so you don't have to do it. I will tell you what the midpoint is, and that's kind of where the market orients itself. But I think there's an interesting moment coming up. I agree with Paul on the rest of this year. I think they do another couple quarters here, bring it down 50, get down 100 basis points, and then kind of think about it. But then the fiscal policy question becomes, I'll back up a little bit, because making monetary policy is a combination of looking at the current data, but also blending in your outlook. And then blending in the outlook of what could be very dramatic fiscal policy changes. Let's say there's a tariff regime. Let's say there are further cuts in taxes. And then layer in your question, Kelly, whether or not this is all stimulative, whether or not it ends up being some combination of push me, pull you, and some restrictive, some stimulative in there. It's going to be very tricky for the Fed. It doesn't want to go late, but it can't get too far out in front of either A, the political process, or B, the effect of the things that are actually enacted. So this is going to be, because what people said to me when I was reporting the potential impact of the Trump economic plans was, you have to think about the whole package. Well, it's a kind of interesting package. There are tariffs, there are tax cuts, there's deregulation, there are potential cuts in federal spending. It's going to be difficult for the Fed to navigate this, and my best guess is it'll do so very slowly.